Europe is a top M&A deal hotspot. That's one of the findings in a new report by law firm Clifford Chance. Partner Patrick Sarch joins me now in the studio. Patrick, is the era of the multi-billion-dollar European deal back, do you think?
Sadly, not just yet. Our survey showed that although appetite for M&A transactions in Europe is strong and is looking to return, it's not really the bet the company deals that people are looking to do. It's more the mid-market deals, say $500 million to $1.5 billion.
One thing that confused me a little bit is the real reason behind this. Is it the fact that things are getting better in Europe, the environment is getting better, or is it because of the continued uncertainty and the lower valuations and the good deals as a result of that?
It is a complex combination of those elements, and it's a bit difficult to divine exactly what's driving that. I think there has been a reassessment of the merits of Europe. There's perceived to be real quality here in terms of brands, technology, talent pool, and so on. Companies have been looking to emerging markets, high growth markets, to develop growth. And the attraction of Europe is not necessarily trying to build European market share, it's to really export some of that technology and the quality to other markets. So people are accepting the new normal to some extent, and that's opening up perceived opportunities. Interestingly, more than half our respondents thought a Eurozone exit would present an opportunity for them to pick up assets on the cheap.
Which countries?
The countries that are hottest at the moment in terms of being attractive are in fact those with the lowest risk from Eurozone type issues. So Germany's top of the list, over 60%.
Periphery is out.
Periphery is out. UK is number 2. Spain, Italy, Greece at the bottom.
Periphery's out because it's way too risky. There's a risk appetite returning, but not for Cyprus, Greece, etc.
Exactly. The risk is too high there amongst our survey respondents. Yeah.
Who's going to be doing the buying?
So the return of debt finance, which we are seeing, the banks are telling us that they are hot to lend money for acquisitions, should mean that financial investors, private equity, sovereign wealth funds, even pension funds, we're seeing Canadian pension funds entering European M&A.
See, this is interesting because, as you well know, one of the big context stories right now is lack of financing, is banks not lending. But you're saying the financing is there.
For M&A, for investment grade borrowers or even increasingly leveraged borrowers, the financing is there. I mean, less than 2% of our survey respondents said lack of cash was inhibiting M&A. So they've either got a strong balance sheet and or they can borrow as well. Which
countries are the big buyers in Europe? Who's most interested in Europe and who's most interested in the UK?
If I can take the last one first, the people who are most interested in coming to the UK as opposed to other European countries are Japan. In fact, Japanese and Chinese investors, but Japan are out front. And I think that's perceived cultural fit. They see integration issues as being harder in the rest of Europe. And labour laws are playing a part in all of this as well. So a quarter of M&A respondents amongst these 400 companies surveyed said that labour laws in Europe were a particular concern both for buying the company and then once you own it. UK doesn't really have those problems. So other than that, we're seeing interest from the US, although their primary target is Asia Pacific. We're seeing Asia Pacific interest into Europe. But also, globally.
Sure. And just to finish up with, to turn this the other way around and ask you, are you surprised that the US doesn't feature higher on a potential M&A target board, given the rebound? It's not massive, the rebound, but given the fantastic financing options it seems in M&A in the US right now. Are you surprised about that?
A little bit, yes. I mean, so Asia Pacific is number 1 target, Europe 2, and that's way ahead of North America, Latin America, Middle East and Africa. So yes, I think the perceived bargains may have gone in the US with equity prices having rallied significantly. Yep. So there is the finance there, but
and of course, one thing we can't forget is the sellers. They don't want to sell right now because they're not getting good deals.
Yeah, unless they're distressed, either a distressed seller or a distressed target, where financing is an issue for those guys, and a new owner can effectively refinance the company. That is a problem.
Yeah. All right, Patrick. Very interesting. Many thanks for that. Patrick Sarch of Clifford Chance. That's it from me. I'm Axel Threlfall. This is Reuters.